The dry bulk sector this year was an absolute mess, it seemed, at the start of the year, but prices have seemed to have picked up a bit.
Yep.
I can't tell what's going on. Tell me.
At the start of the year, we obviously had poor weather in Australia, affecting both East Coast and West Coast export ports. Mines hit for coal and iron ore, which meant there was a lot less cargo being exported from those ports, and that meant a lot less demand for ships in the Pacific, which obviously meant that there was more competition for the ships that were available, and prices really plummeted. Over the course of the year, we've seen a lot more demand for the vessels as the cargo has picked up again once everything has been improved and we've got more flow between the mines and the ports. In addition, at that same time as the bad weather, you had the Japanese tsunami, and there was a drop down in imports because there was damage there. We're now seeing a pickup in demand from Japan for reconstruction efforts of areas of the country that were damaged. They need more steel, and so they need more steel-making ingredients, iron ore and coal. In addition to that, we've seen a pickup, a surge during the sort of summer months, August and then September, of China really picking up its iron ore imports, which surprised some people, absorbed a lot of tonnage from the Capesize market in particular, and really boosted the rates. Now that seems to have slowed down. There's more uncertainty about China's steelmaking production and their demand, therefore, for those products. Going into next year, that's a theme that will carry on, is the uncertainty about the Chinese economy, inflation, what that means knocking on for raw material needs.
Would we expect to see more bankruptcies of dry bulk owners?
It's something that has been suggested during a lot of the third quarter results calls that we've seen. Well, at the moment, a lot of the dry bulk companies are managing to keep their daily earnings above their operating costs, which has not been the case for the tanker sector.
Yeah, they'd love it. The tanker owners would love that situation.
Have their neighbours to go down the pan as well. But basically, it could happen. Next year, we're going to see another huge glut of tonnage hitting the water from Asian shipyards, and that will mean more competition, lower earnings, unless there is a huge pickup in demand. Again, big uncertainty. So it is definitely a possibility that could be on the horizon.
Now, quick question on Vale in Brazil.
Yes.
When are their vessels, their Vale Maxes, coming on stream, and what difference will that make to that market?
At the moment, we've seen 4 delivered. 3 from Daewoo Shipbuilding and Marine Engineering and 1 from Rongsheng in China. What that means is basically that there's going to be less demand for other Capesizes to ship iron ore to destinations such as China, other Asian destinations, but also Europe, the Middle East. And that just adds to the overcapacity in the market and reduced demand for sort of smaller, more conventional Capesizes, which is not good for anybody.
Well, plenty to write about, of course.
Definitely.
Okay. Thank you, Liz.
That's fine.